This government meeting is brought to you by Eastworks and our local cable subscribers.
Hi, everybody. Welcome to the Easthampton City Council Finance Committee meeting for May 20th. This is closing in on the end of our budget hearing cycle. Tonight, we're going to be discussing revenue, general government, and CPA. But before that, I would entertain a motion to approve the minutes of May 9th.
April 9th.
April
Isn't
9th.
it? Yeah, we're that far back.
Oh, wow.
April
Okay.
9th.
Of April 9th.
So moved.
Motion a second. All in favor?
Aye.
Aye. Motion passes.
Thanks.
Mayor's communication, anything, Mayor? Other than
Nope.
this? Okay. I don't think there's any members of the public here. So, oh, there's, okay, no. There's, I think, no members of the public. So I guess we can just get to it. And
Some people.
oh yeah, Salem, Tamara, could you mute yourself?
Oh, I'm sorry.
It's all good. Okay, so let's start with general government. First up, we have City Council. I think I could speak to this, but Salem, I see you're online. Jump in if you want to say anything. It's our salaries are unchanged, clerical stipends unchanged. Advertisement went up a little bit because it gets more expensive to advertise. We did ask for an increase in our legal expenses. I think that kind of makes sense. We're trying to pick up more of that tab ourselves, but it's not that we're going to be doing more legal. It would just be that it would be coming off of our tab instead of the city's. Education and training gone up slightly. I assume that reflects the MMA dues. But yeah, it's other than the legal expenses, largely the same budget as last time. President Derby, do you want to speak at all to this?
I think you covered it pretty well. Not very many changes.
Okay. Yeah, this is the budget I'm most familiar with. All right, so I think we can move on unless any questions, comments, councilors? All right, we've got mayor and city attorney. Mayor, do you want to speak to this?
Mm-hmm. So the budget's pretty clean for the mayor as far as the salaries, following, the mayor's salary per ordinance and then the clerical salary according to our pay plan. Then you're looking at training and education goes up 2% due to MMA dues. And then dues and membership, we went up. Education and training, yes, we went up 2% because there are certain, like the MMA winter conference, the mayor conference, and then 1% on the dues to MMA themselves. So that's the ins and outs of it. Not a lot of change, just keeping up with our dues and conferences.
Okay. In-state travel went up a bit.
Yes, in-state, my apologies, yes. That went up a bit too. We're following the federal mileage rate.
Okay. All right. Questions, councilors?
I'm just curious though, why is were we not following any sort of mileage rate?
We were down, like we're at 53 cents, like it was.
What's the federal?
7.
What was it?
70.
Yeah.
70.
still a lot.
We didn't update. It wasn't like you jumped that, we didn't update
Our
it.
rate had been updated
Yeah.
many years.
Right.
Stayed static since about 2017.
Yeah, I
2018.
don't think we changed it
We were
until,
kind
yeah.
of sitting on it.
Yep.
Okay.
All right. Anything else? How about city attorney, unchanged?
Unchanged, and we flat fund this, we never know quite what's going on, or what will come up, so we flat fund it at this amount and then come back for appropriation as needed.
Any questions about this, councilors? Licensing.
So for licensing, education and training, just in case something does come up as things go in person, or we want to go to a legal training that's outside of the state. So we kept 300 in this, as a just in case, benchmark, but we've not spent a lot of money out of this account.
Got
This
it.
hasn't been a need.
Councilors? Okay. Assessor.
Salary is just based on steps and, collective bargaining, would that be for our two, the part-time clerical. Okay, part-time clerical will be our data collector, and our office manager would be the admin, and the assessors would be our board members. Education and training was changed. We had to move our education, what was it? What used to be travel was included with education and training. Was that right? And we had to separate those. So education and training is just attending seminars, conferences, and then in-state travel had to be separated. Everything went up. Our dues went up, $93 per person for the MAO. HHCA is unchanged. There's a mass chapter of the International Assessors Association that I am a part of. That's $25. And then the International Assessors Association, they seem to be offering more and more classes over the MAO. And the professional and technical services. I left a note because this fiscal year was our revaluation, which is much more extensive. It happens once every 5 years. So this year it's down because we still use a consultant for our utilities, commercial, industrial inspections, which we haven't done in a while. So I'd like to have some of those inspected. Our data collector does not do commercial industrial.
Where does that fall?
The professional and technical services would be our consultant. And that's down.
Yeah.
But it needs to kind of be book noted for 4 years from
And
now.
you didn't spend any this year. Says actual to date 0. Is that because you do it all at once later?
We spent it. We spent FY 25s. So there's nothing
Oh,
left.
That's not the balance. That's the balance.
That's the balance.
Okay.
Yes.
Okay.
I thought it should be the other way around.
Usually it's how much has been
12
expended.
two, like it would be how much you expended, which would be 12.2.
Yeah,
Oh,
it just might not have been recorded. at
yeah, I
that
don't know.
time.
That's how this, I didn't,
Oh,
that's how
okay.
the spreadsheet kind of filled in.
Okay, so but you have spent everything that you were budgeted for 26 in that line, 5 in that line item, professional and technical.
Yes.
Okay.
So I just have a quick question, sorry. Are these numbers what has been spent, or is this how much is left? So I understood that this is how much is left or has been spent.
Yep, that's what we were just talking about.
No, I know
It's-
that, but
it's-
I'm asking about all the other numbers.
Oh.
That's what is left. All the other numbers, 1,835 is what's left as of the date that I entered.
You sure it's not the other way around? It should be what you've spent. So like,
Already.
if you look at salaries, well, I guess half and half, so I wouldn't really be telling, but typically it's how
Okay,
much
is
you
what
have
I
spent so
spent to
far.
date.
Yeah.
I may have just, okay.
But I have a question though.
Yeah.
Again, sorry. And this isn't to you per se. Are all of these reading that way or just this one particular budget?
Yeah, they're all actual, what we have spent to date, and the date of what we spent is January.
No, I understand
Because
that.
I was pulling
It's not what we have
these-
left.
I was
all of
pulling
them.
these from what I received from Hadel
Right, which is,
as the date that I received it.
It is what's spent.
it's what,
The budget is prepared on the basis of 6 months, so it's only from July to December. So
What
it's
has gone out the
easier,
door.
yeah,
Yeah.
it's easier. So it's easier for us to compare like halfway through the
Sure.
fiscal year, what happened.
How you're doing.
Yes. Some of the expenditures happens after January, so you would see it like, for example, my budget is like all of my big conferences takes place in March and June, so I won't be spending 50% of my expense lines, but
Right.
at least it's, you can see that, okay.
Yeah.
There's justification why it's not spent, but everything, all the departments, actual to date is actually from July to December of the fiscal year we are currently in.
So Martha was just saying.
So my mistake.
Well,
yes,
that's all right. We'll bring it up
yes,
later.
Hadel is correct. I'm not disputing that, but I have not been billed by my consultant yet. So that 12,200 is
Boom.
still there.
Boom.
My
Mic
apologies.
drop.
I have it right here.
Excellent.
So
Glad we could clear that up.
Yeah.
I was
I-
just,
I need-
yeah, no,
I don't
thank
look at
you.
this
I was about to be like, can we go back and take a look at all of this and make sure?
That's why this is really good because I have it right here
We
that I
got
get
you.
from
We
Hadel.
got you.
Thanks.
Okay.
Any questions?
Wedding.
We all feeling good about
Just so
that?
nervous.
I think this all makes
Don't be
sense to
nervous.
me.
We're very kind people.
Okay.
So,
All right, sorry, thank you.
That was fun.
all right. Neat.
Little levity, levity.
Any other questions not about the actual to date?
And just again, you mentioned in-state travel. This in-state travel is reflective of the federal rate.
yes,
Just want to make sure.
So did the federal rate ripple? I mean,
we had the same rate, like from the time I came into office
Okay.
until we wrote a new travel policy, and now we follow the federal rate.
Okay.
So there was a big bump up.
all right,
And it will pace now with the federal rate going forward.
good to know. Okay. Auditor.
That's you.
That's you.
Yes, so my salaries are pretty much straightforward calculations. It's a breakdown. The first line is for the auditor's salary. The second row is for assistant city auditor. And the third one is the part-time clerk, which that position was added last year for 20 hours due to the increase in the workload in audit office. That's the personnel side. The expenditure side is education and training. Me and my assistant goes to what's new in municipal law, which takes place in November. Kathy, who's the assistant, is also looking into possibly enrolling herself for the Suffolk University Finance Management classes. So I put that money in there. We both go to our annual education program in March. I go to the fall conference and I go to the annual meeting in June. And that's the education and training. All the associated travel expenditures are related to the education and training. Dues and membership, we both maintain Mass Municipal Audit Association's membership, so that's right, $185. MGFOA is just me who holds the membership. Sometimes they do have good classes, so I go to those day conferences or like a half a day conferences to see what's going on with the current topics, because every time there is a new regulation, there are rules which nobody knows. So it's good to go to those conferences. And then the last section is for the financial audit and audit GASB. That's the whole city's books, including collection, treasury, retirement board, all
What
of
does
those.
GASB stand for?
GASB is so I don't know the full form. It's a government accounting regulation. So it has to do with the financials.
Okay.
And it is one of the standards at the country level, which is reviewed. It's prepared by Tom Scanlon, who is our external auditors. And when they provide us financial statements, that has been reviewed by bond counsel and all the financial institutes we deal with.
Yeah, to get, the
But it's-
GASB is the,
One of
it's
the accounting
it's
standards.
the unfunded, OPEB.
No,
No,
Sorry.
that's totally different.
Yeah, it's not.
Yeah, that's totally different.
Also known as the Great Gatsby.
I was waiting for
See where
that.
this,
I like that.
see where this is going. Why would salary go down?
Why would what?
Salary go down?
Um,
It shows 107 last year and 96 this year.
yes, there's a reduction in my hours. So I used to work 40 hours, now I'm working 35 hours a week.
Any questions?
Reduction in hours, are you still able to get done all the work that you need to get done in those hours?
It's challenging, and especially having a vacancy in the treasury position is absolutely challenging.
I'm happy to speak to this in executive session, but it's a personnel matter.
Yeah, no, I'm asking, just.
Got it. Okay.
All right. Anything else? Okay. Treasurer and central purchasing.
Yep, Mike Owens here for the treasurer's office. Let's start with treasurer. Salaries are already all pretty self-explanatory. The treasurer's salary at the very top of the column is, I think, the median salary between the low range and the high range for the treasurer. Right now, there is no treasurer. Assistant treasurer salary is for Jeannie Martindale. Then there's myself, and then there is Maureen, who does the school payroll. All the other categories are pretty much level funded. We have seen an overall slight reduction in the bottom line from 294 to 290, and that's really related to the salary of the treasurer. In-state travel is low, and so is education and training. Staff will be going to Seacrest in April for the statewide meeting, and then they'll be going to the school in August. And there's some other statewide events happening in June. Everything else is pretty much self-explanatory.
So Michael, the salary, the top line is for a treasurer for which that is a vacant position currently.
Yes, it's a vacant position
And then
currently being advertised.
The assistant is somebody. Are you
Is a
still
person.
designated as a procurement officer? Is that line item you?
Yes, it is.
Okay. And then the treasury, admin, and clerks, they help everybody.
That is only one person, and
Okay.
that is the part-time individual who handles school payroll. Works very closely with the business agent upstairs and the assistant to the superintendent
Okay.
to process school payroll.
And the city and school payroll processing on the lower portion went down by a couple of $1,000. Do you know, is that a person or a process or a chargeback?
That's a process. Both city payroll processing and school payroll processing are both expenses, third-party expenses. We're currently having Harper's payroll do our payroll.
And they've gotten cheaper?
They have not gotten cheaper that I know of. We are in the middle of a transition towards a new payroll provider.
Okay. I'm hoping they'll be cheaper. I mean, it's $2,000 cheaper. I'm just wondering how you arrived at that number if you're going to be switching over.
We
Am I-
believe, I didn't arrive at these numbers, quite frankly.
Yeah, the new system that we're transitioning to is per employee, like every month, so we have a more accurate billing cycle, and the overall software package is less. We will be using a little bit of ARPA money we still have to help through that transition, and maybe, and as we can, maybe put some towards the software itself, but this is what we calculate the new ADP is the new system of what we're expecting.
Okay. Anything else on this?
Professional services will get used up in the next 2 months. Generally, I will assist. The treasurer's office will work with the city clerk to identify all the surplus paper storage in the basement. And we will have our vendor, Valley Green Shredding, come over and get rid of all those items. And we'll see that sometime in May or June. I think right now there are 12 boxes of paperwork that's been marked for destruction. Now
Got it.
Valley Green Shredding. So procurement, do you want to move on to procurement?
Sure, just for.
Does anyone have any
I'm all
questions?
done with.
Yeah, all right. Go to procurement.
Okay, I want to thank the mayor for the increase in the budget across the board this year of 8.44%. Almost all of those monies will be put towards postage costs. The budget itself is pretty self-explanatory. The big expenses that I generally have are postage and bulk paper supply. Everyone gets assigned a number for their office supplies. Some underutilize that budget, others overutilize that budget. My general approach to this is no one gets refused office supplies. My job is to make sure people have the tools that they need to do their job. So I may borrow from Paul to pay Peter throughout the fiscal year. Ultimately, no one gets refused office supplies. I always find people what they need when they need it.
Yeah, it looks like really the big change here is just extra postage. Not much we can do about that. Questions, councilors? All right.
Thank you, folks.
All right, technology is up next.
There is no significant changes in salary. And no actually significant changes also in the overall operating budget. We had been able to secure grants to do most of the upgrades needed. And even though it's not visible here in that chart, I just wanted to show you that if this is the overall budget, we see an increase in software and a decrease on equipment. And this is how we were able to balance and remain within. So some of the software are things that were grant funded and suddenly they become part of the IT budget. And we are still working on better communicating when a grant is awarded to make sure that the equipment is then integrated into the city budget. So we know it needs to be maintained. Computers need to be cycled through and software needs to be integrated into the IT budget. But overall, we're working well. We feel that we have the resources we need to have a secure environment. So thank you, Mayor, for making that possible, and city councilors.
Councilors, questions?
Just on the salaries, are those steps or are they
Yes,
that's
that's,
not collective bargaining? They're just steps.
steps, and I think it's part of the new collective bargaining.
is the only one not.
Okay. Thank you.
Anything else?
So that's a 1% increase, is that correct?
That's correct.
And is there anyone in here who's off hours?
Potentially, yes.
Any other questions? Got collector up next.
So the tax collector salary is pretty much the same. There is a step, but I did go down an hour from the previous year, so it kind of washes out. The assistant collector salary went down because she's a new employee. So that's the reason why that went down. There's a $1,000 stipend because I'm now certified. Advertising, recording deeds stayed the same. There was a change in the law for tax titles, so we're gonna have giving people a little extra time to try to get caught up with their taxes before going to the step of tax title. So that remained the same. So hopefully we won't have more than 7 like we had the previous year. Education and training, that went up because there was only one of us going to school, and now there's 2 of us that will be attending. And professional services went up a little bit because of the cost, the increase that the deputy collector is charging now. Different inserts and not postage, envelopes and forms. So that went up a little bit. Postage, I did about a 10% increase because that keeps going up multiple times a year. Office supplies went down a little bit. In-state travel went up because it's going to be 2 of us traveling where it was just 1, and because of the mileage and the registration fees went up also for the Cape Conference in June. And dues and memberships pretty much stayed the same. And the bonds stayed the same.
Right.
I may have missed it. I'm 100% sure I missed it. There's no may about it. The longevity and certification stipend, are those for you? Are those for length of
Yes.
service kind of thing?
So yes.
Okay. And then the assistant's salary is lower because it's a new employee
Yes.
from where it was a year ago?
Right.
Okay, thank you.
In regards to the salary and the loss of hour, do you have enough work to be able to fill those hours?
Enough work?
Mhm.
Absolutely.
So does that loss of an hour kind of impact your?
No.
Well, I don't have any other questions. Do you, councilors? Human resources.
Not a lot of changes this year. Salary is just the step increase. Neither one of us is in the bargaining unit, be a conflict. And then under that, we have advertising is pretty much the same. I just kind of moved a few things around. I'm hoping for less advertising this year. It was, we had a lot last year, and thank God I had the planning department help out, and some other departments were able to kind of chip in with some of their budgets to help fund those. So that was good. But education and training, part of the MMHR. So I participate a lot in those events, and there's like 2 big meetings per year that I go to. Professional services is going to be custom drug testing, who does our random drug tests and stuff like that for DPW. And then it's also, we have a part-time contracted benefits coordinator that comes in 1 day a week and, you know, kind of helps us with our bill processing and stuff for insurance and our enrollments. So the professional services covers both of those. Then the actuarial study is OPEB that we do, the other post-employment benefit report that needs to be done every other year. So last year we had the $100 just kind of as a placeholder for that account. And then this year we'll actually do the study. And then the only other thing that is a change is we're requesting an account for employee engagement. We really want to start prioritizing our employees and making them feel really valued in the workplace and acknowledging milestones in their lives. And a lot of times, like things like retirement cakes and stuff like that come out of my own pocket. So that tends to add up, and it's very challenging to try to make sure everyone feels recognized. So we are requesting $1,000 so we can really create a very inclusive environment here and try to work on that. So that's all we've got.
Counselors? Counselor Dunaway.
Like DPW, I'm noticing the increase in salary. In DPW's instance, it was taking on more responsibilities, but this looks more than about 3%. So is there a reason for that?
I will calculate. I think last July, the mayor had added another step in July using ARPA funding because we went from about 6 collective bargaining units to 11, of which we were doing the contracts all for ASME and dispatch. And then we had our police split into 2 unions instead of 1. And we've taken on a lot more school responsibilities. I started sitting on the collective bargaining board for that. And we've absorbed more of their HR components.
And did other employees receive an ARPA step?
I don't know exactly or how, I'm not at the back end of my
as well as supplemented other people's money, other people's salary with ARPA.
So what does premium pay mean? What does that mean?
Up to $25,000. Folks could receive if they were doing work above and beyond related to ARPA or expansion or different services under the government. So there was some ARPA to put Emily at another state, another grade, and our department of public health director at the time, Bree Eisenstadt, our auditor, a little bit for Greg and DPW that augmented, but it did not go, and Greg didn't go towards a step.
So
I mean, Greg,
did anybody else's go towards a step?
no.
Any other questions? City Clerk.
Hello, Mary Ann Gies. I'm the city clerk. Everyone knows Barbara LeBavard retired in March, did prepare this budget herself ahead of her leaving.
Disclaimer.
So, yeah, so the city clerk salary and the assistant clerk salary did decrease due to me coming from assistant clerk to city clerk. And the assistant city clerk is a new employee. Longevity is just for myself. I've been here 31 years. So, let's see, the binding, Barbara had an explanation of that every 2 years we bind 2 years worth of street lists with a hard bound, and that is what's binding. We're going to do 2024 and 2025. It costs $167 previously. I noticed the miscellaneous professional and technical services increased. She includes in there our timestamp that we use almost every day for planning board, applications, anytime there's elections, petitions, things like that, nomination papers come in. We use that frequently. It is older and sometimes it did need repairs last year. But I believe that's why she put extra money in there. And this also includes the King Information Services annual audit, which happened on May 5th. As Michael said, there's 12 to 13 boxes that can be shredded. And that the money for the audit comes from our department, and it was $850 last time. I did just get the bill. I believe it was $839. It was approximately the same amount. Printing, we do print our own envelopes in the office. That could change going forward. She uses one of the correctional facilities in the state, so it's very inexpensive, but I know that's supposed to go through the mayor's office. So we have some built up that will finish off that supply of what we have. Office supplies, we have like special paper for issuing the vital records that we have to order. We order like 1,000 sheets at a time, so that adds up. That's the minimum that you require you to order. We also have these plastic sheets and special binders for putting the records in. The dog licenses should remain the same. Looks like 300. We purchased them from Franklin Council of Governments. The travel is moved into the elections budget, which will probably be up next. Dues, we have a Massachusetts Town Clerks Association that myself and the assistant belong to, City Clerk and New England Clerk Associations. And the safe deposit box and bonds for the city clerk and assistant clerk are in one line item there. We have a safe deposit box with microfilm and our old records at the bank, and the bonds are $100 for clerk, assistant clerk positions.
How long do those microfilm things stay at the bank?
They've been there ever since I started.
So they just keep, and there's more and more, or do you throw out a year when you add a year?
Nothing new is being added. It's just the fee to keep a safe deposit box.
So what's there is what's there.
Yes.
Okay.
Yeah.
And you keep something in it?
Yes, we have
the microfilm.
Yep. And we also have the same copy of the microfilm in the safe in our office. It's kind of
redundancy.
Two copies, but we've had that safe deposit box since I've been here, and luckily it isn't very expensive.
Okay.
Thanks. Is that something that would ever make sense to digitize? I mean, it's a small amount of money. I'm just.
Yeah, that's something we could look into. I have to say, I've never, even though I do the notarizing for the bank and the many drill safe deposit boxes, I've never looked at our safe deposit box there for our office. Something I should maybe.
Might be
curious.
look into. It's not an amount of money I'm gonna throw a fit over. I'm just kind of curious.
Yeah.
Probably costs more to do it.
It probably does. I don't know. Any other questions, councilors? Okay. And then we've got elections and registrations.
So for this fiscal year, we have one election, just the city election in November of 25. So you'll see some of the amounts are reduced due to, we will not have just one election versus like the typical year of 2 or 3. We won't have as many workers, the programming for the ballots and the boxes and all that will be lower. Barbara did have a note here that there'll be no maintenance for the new ICPs, the new computers that we got to ballot box to process the ballots, but that will be coming in.
Because we paid for that in advance, like that's the.
They don't charge it for the first year. That was back when we had that. City council approved it.
Yep.
And they have arrived, and we had training on that. The assistant clerk and myself, and they will have training for our election workers closer to the election, probably in September. But for fiscal year 27, it will be about 20,450 maintenance that will be included. So the clerks of the board of registrars, that's set by Mass General Law, board of registrars as well. Let's see, she has election worker salaries in here and election overtime for clerk and assistant clerk if that comes up. So the city election programming for the ICPs and the auto mark, the ICPs are the regular computer tops that we put on the ballot boxes that that count the ballots. The auto marks we're just had someone come in to do the yearly maintenance on those, and those are the older machines that look like a big suitcase that are to be used for anyone visually impaired, hearing impaired, or anyone who would want to use that machine to mark their ballot, and they have a screen they can use as a touch screen and headphones and so forth. Those are required to have. Even though we have one polling place only, we still have the two machines because we've had them for 20 something years.
Right.
So it's supposed to be one per polling place. So professional services, the ICPs are the 8 tabulators times 250 each. It's 2,000. The poll pads, which we use, 2 per precinct, and we have 5 precincts checking in the voters. The maintenance on those is 300 times 10 poll pads, 3,000. The software we use for election reporting, including ranked choice voting, costs 800. For the city election, approximately 10,000 ballots plus shipping, $3,000. And then she has a note about we do a census first mailing in January. We have a vendor do that, costs $3,900 approximately. And the second mailing, sometimes by vendor or in-house, depending if we don't have that many second notices to send out. We sometimes print them ourselves from our state computer system, and that costs around $1,500. And the census postage, Mike's probably happy about this, is in his budget, so in the central purchasing budget. The street list books have gone way up. We charge $25 each, and that is what they cost us to print. It seems like, on the advice of Barbara, and I've noticed myself, the sales of those have gone down. We have approximately 30 extra books this year. So I am planning on probably only ordering 50 or 60. We do give a couple to the library, the Council on Aging, and Dispatch generally use them. And some members of the public purchase them, but we don't obviously charge the departments that want to use them. But it seems like that number has gone down. So I'm not planning on spending that full limit, definitely not 100. I was counting today how much to order, probably 50 or 60. And then office supplies, mailing labels for elections, printing. We have to send out these things called confirmation notices. It's a double postcard that we get printed at a vendor. That's with $1,000. Those are for people that did not answer the first or second notice of the census that are voters. We have to give them another opportunity. It's a state law to respond, and we have to put a return postage on the postcard as well. So that's part of postage. Let's see, envelopes for second mailing of the census and all voter registration mailing. So we have in the queue every day approximately 50 voters. Some are, now that we have our state has, you cannot opt out of automatic voter registration. So we get a lot of duplicate registered voters, and we only send the notices to ones that are new or any changes have been made to their voter history, voter information. But we still use a lot of those window envelopes and for mailing dog license reminders. She has 3 clerk conferences on here. There's one in February, June, and September. I am planning on going to the one in in June in Plymouth. And Maddie, the assistant clerk, I've offered if she'd like to attend the one in September. They try to spread them throughout the state. So, one kind of Western Mass. So the one in the fall will be around the Sturbridge area. So she's interested in attending that. So it's just budgeted for one person, but I think take turns attending. So that's about it.
Councilors, any questions? All right. Looks good to me.
Go easier.
All right. Next up, we have planning.
So, hi, Allison, I'm the planning director. So a lot of you probably know there's been a lot of turnover in the department since the last budget was done. And so the salaries over time have fluctuated quite a lot, in part because of that. The FY25 budget salary for the planning director was, I think, put middle of the road because there wasn't anybody in the position at the time the budget was done. And everybody else has just gotten their contractual increases. The part-time regular is our senior planner, and a portion of her salary is paid through grant funding. And the conservation agent salary went down in part because of turnover and in part because she now also staffs the CPA. So she's partially funded from that as well. It does take up a lot of her time. So we had I think an overall net decrease from 25. Again, I think largely just because of the staff turnover. We don't have longevity or anything anymore either. The expenses are pretty much staying the same. There's an adjustment in education and training. Previously, we didn't take out the in-state travel component, and that was taken out this year. And it's online. The planning commission is PVPC. We have annual dues. All the communities that are a member have to pay that. Dues and memberships, American Planning Association, American Institute of Certified Planners, and the Mass Association of Conservation Commissions is all included. Advertising, we overspent this fiscal year that we're in now by a lot. So I did increase it a bit. Hopefully we'll have less staff changes to advertise for one thing. Hopefully we'll be advertising for better reasons. But yeah, that's the gist.
Okay. Councilor, questions?
I have a question on professional services. Is that number there, because it's like 00 and then adjusted for 25, is that because you needed to use an outside service to plug some of the holes in the turnover of employees?
Exactly, yeah. So when the prior planning director left, I think it became apparent at a certain point that the position wasn't going to be filled immediately. And so the Pioneer Valley Planning Commission was hired to fill in on an interim. They actually overspent that amount a little bit, but yeah, it was just a one-time.
Okay, thank you.
Okay. Any other questions, councilors?
I don't have a question for you.
Okay.
But this is just about regarding the city budget.
Sure.
I just want to make a comment that I very much appreciate the work that all of you do. I think that each of you in many ways are on the front line of dealing with our residents. And some of that isn't pleasant. And I think that you all handle that with a lot of grace and a lot of respect to our residents, because I think we're living in very challenging times right now, and sometimes you're receiving the brunt of kind of their frustration. And so I just really want to acknowledge that I really appreciate everything that you do for the city, and I want to acknowledge that. And also, I've mentioned this the last time as well. I think that it's come up again that we've had some employees who have had their hours cut, and I genuinely, I don't believe that that's fair. And I've mentioned this to the mayor, and I said this last time. I think that there's other ways for us to be able to fill these gaps. When I look at these budgets, I think that we can still continue to provide the services that we're providing, as well as ensuring that our employees are given that additional hour back. I think that has a long-term impact on their desire to work in the city. I think it impacts their morale. And on a personal level, I think it impacts their day-to-day just living and support for their families, as well as their retirement. And so I'm very much struggling with the fact that I have to sit here and listen to people who have dedicated their time and energy to the city and to the residents, and they're, losing these hours. And these are people who have direct contact with our residents, whether they're providing support to the services within this building, or they're providing support in other buildings. And I want you to know that I'm deeply distressed in this particular moment. And I've spoken to several individuals who've expressed that this is a big financial hit for them, and people who have earned steps for many years who now are having to kind of start over to kind of get some of their rates. People have mentioned to me that they're working through their lunch breaks now in order to make up that work, et cetera. So I just wanted to know that I support you, and I appreciate the work that you do for the city. Thank you.
I believe that this is it for general government. The next thing is building and operations, but we covered that during the DPW section. So unless there's anything else, I think I can move to CPA. I want to do revenue at the end,
Okay.
just so that
Thank you
the
very
most
much.
people don't have to
Yeah,
stand.
thank you. Thank you.
All right.
It's nice to see you.
Do
Do you want oral support?
Oh, no.
Thank you very much.
That's all right.
I'm a good sidekick.
Let's talk CPA.
So the CPA budget is very different than the department budgets. It's based on a surcharge that each property owner is assessed with their property tax bill. The state has a Community Preservation Act trust fund, which provides a partial match, if not a full match. It does depend on what's available in the trust fund and how many communities have adopted the Community Preservation Act and some different variables. So each year we're sort of projecting what we expect for revenues from the surcharge to our residents, and then also projecting what we expect from the state because we don't know for certain. And the state match is based on our numbers. So all of these are like best guess kind of what we could do. 10% of all of the budget has to go to each of the three funding categories. So 10% has to go to open space, 10% has to go to historic preservation, and 10% has to go to affordable housing. Then from there, you can allocate directly to projects or put the remainder into the reserve fund to be appropriated at a future date by the city council. And there's also some salary and expenses built in there too. There's a CPA coalition, I think they call themselves, that has an annual due that's paid out of the expenses. And there will be a little bit of support for Ava to do the Community Preservation Act plan update is in that expense. And then the salary is for Ava, who attends all the meetings, as well as represents the CPA at these meetings, finance committee meetings, as well as city council. We don't have any special project set-asides this year. There will be money for the Berry Street affordable housing that was already promised. It has been moved up into the reserve for affordable housing. So it's just another way of it's just a different way of budgeting the money. It gives us a bit more flexibility because it leaves more in the budgeted reserve for projects that are submitted throughout the year. And then down below, there's these the revenue estimates that inform the overall budget. So you'll notice that the budget total and the revenue estimates match. And then there's a third section that is the state has actually 3 rounds of matching potentially. The first round is like the most substantial and everybody gets a match in that round. And then depending on what's left after that, they do a second round. And then if there's anything left, they do a third round. And those second and third rounds are based on like community need. And there is a formula for how they calculate that. And we do typically get second and third round funding. It has decreased over time. And we always want to be conservative. But nonetheless, that money can't be used this coming fiscal year. It has to kind of be like held until FY27. But this gives us an idea of what's coming. And that also gives the CPA a little bit more flexibility with their cash flow because each year there is that carryover of money. So yeah, there's, you know, a little bit more nuance to some of the numbers that I can get into if needed, but that's pretty much it.
Questions, councilors?
So just from looking at this, if I understand it, there's a high probability I do not.
I'm
Percent,
on the committee and I'm only
percent match
sort of
rounds
gonna-
2 and 3. Yeah. Has it really been cut in half? Like from 30 something down to 15% of the match?
So that was what was, so that the state releases like this is what we think might happen, and that's what that was based on. So yeah.
So you had originally, so for the last few years, we've been getting 30 something percent.
Yeah, so you'll see
And
the
then-
actual 24 was 115. And then the projected for 25 is 105 versus 22, we got $229,000. So yeah, I mean, it has decreased over time. I guess there was kind of like a boom year for the trust fund around COVID because it's based on registry of deeds. Fees
Oh, and
stuff.
everything.
Yeah.
Right.
Yeah, so I guess that, you know, with property and selling
There's a lot
property,
of
and there was like
exchanging
a
of fees.
surge. Yeah, so that was, those years were good years. It has gone down a bit, unfortunately.
So you're in the 15% range-ish, and is that where you expect to land, or is that still something that could change?
I don't expect
I
it
get
to
you a
change.
dartboard.
I mean, the market is tight. Property, they're like the sales are low. I don't expect it to change, unfortunately. Not substantially. And like I said, we try to be conservative. We can't use this money this coming year anyways. Hopefully we'll end up with more, but.
And just for clarification, were you saying that the COVID years were good years?
In that very limited sense, yes.
Couple of very narrow subjects.
If you're in the real estate biz, they were great.
They indeed.
The other thing with the match percent also has to do with the state. So, and what do they put up as a match to our
Yeah,
money?
that's what I was saying.
Yeah.
That's, yeah, what I
They're,
was
they're
kinda
gonna
trying
cut
to.
it way back. It looks like.
Yeah.
Yeah, there's a formula.
So there was one year, there was a supplemental budget was passed by the governor. That's why we got that additional round. And last 2 years, there are more communities who adopted CPA regulations. So now the pie is same, but the portion
Slices are
is
getting
Yeah,
smaller.
yeah. That's
What
also.
did they do that for?
Yeah, why don't you go invest
Yeah,
in
they're
the free
ruining it for
communities?
everyone else.
Right, I did mention that. I should have put more emphasis on that though, because it does, it plays a big role.
Okay, that makes sense.
Then there were some cities also that wanted to stop CPA, correct?
yes.
Yeah, I don't know how many.
There is the whole, because it's an incoming revenue, it affects so many other areas of the revenues and the operating needs. So of course it has to go on the ballot. So I don't know if that passed or not.
So I had a resident say to me, we need to get rid of CPA. You're right. So I'm assuming that is a conversation that happens in other communities.
Also, there are also communities, and we're one of them, so we do the most you can do, and some have adopted it at less than the 3%, or have started with 3 and gone down, or started with 2, supposed to go up to 3 and have decided not through, the public process. But yeah, I mean, the Boston and Worcester coming into CPA, passing CPA was a real deal changer, not a breaker, but that the amount of money distributed, and so the match honestly wasn't worth it. I think, communities looked at it and decided it wasn't worth it on the pain on the taxpayers. So I would anticipate seeing more of those things. I mean, that's what other mayors are sharing, that they're looking at the percent and not totally giving out, but lowering the percent.
And what is our percent? 3%.
Our surcharge percent.
Yes.
Yeah, they use a percentage also for determining the match.
Right.
It's like a ratio score. Each community has its own score.
Each taxpayer pays 3% of their tax bill.
First 100,000 excluded.
Okay.
Yes, and the fact that we are at the full 3% is what allows us to be even considered for rounds 2 and 3. If you're not at the 3%, you don't, you're not eligible for that.
Okay, thank you.
But I can speak to other communities also, like a lot of them sit on their CPA money. Where I came from, I don't know that they had done an affordable housing project in a decade. And
think
here
by the
we do
time-
stuff every year, so.
I think at the time that I was coming into the council, we hadn't really touched it for affordable housing a whole lot in a long time. And that was something that I feel like a lot of the current councilors really advocated for.
Putting our money where our mouth is.
Yeah, and I think that I think it's been great. I mean, it's also been hugely expensive for those projects aren't cheap, but you know, we have a housing crisis and this is a tool that you can use to solve it. So we've used it. And I personally, I have to say that out of all of the municipal tasks that I have, serving on the CPA is probably the most fun one. Because
You're the money guy.
well, if it's your money guys, but it's also, it's projects that would never otherwise find their way. Like they're just like, if your municipal government is so much about keeping the lights on and just maintaining certain levels of service and doing something like saying, hey, wouldn't it be great if we helped a local senior living facility help like clean up invasives on their conservation restricted land. That's something we just did. If there was no CPA and they came to us, we would just like, get out of here.
There would be vines growing all over Lathrop. Right now.
Yeah, it's just like there's just a lot of these things that they do. Like there's just no way that a municipality would consider them unless there was a specific fund set aside to do specifically that thing. And so it's also just a super. This is beside the point, but just it's a super fun committee to be on because you get representation from all these different, like from the planning department, the conservation commission, all these different groups, and so it's sort of just it's just a really exciting, interesting, cool thing to do, and I'm a big supporter of it. But in terms of the budget, it's sort of an interesting budget because we don't really have a tremendous amount of control over a lot of this, but I hope we get lots of money and get to spend it on cool stuff.
I'll quote you. Spend it on cool stuff.
You can quote me. Put that in the paper. Do either of you have any questions on the CPA budget? I think we're all set.
All right. Well, thank you very much.
All right.
Sure you don't want to stay?
I would love to put my daughter to bed.
Now we get to have a fun conversation that we've all been waiting for, revenue. Which is
I think it's up.
It's us.
I think revenue summaries.
Revenue summaries. Okay. So we don't, all right, there's not a spreadsheet for this part. We can just go through the sections. Right? I don't,
Should be.
Should be. Like the whole thing.
Yeah.
well, there's
I
these
think it's
DLS
at the end of the
Okay.
graphs,
after the DLS graphs.
right there.
Okay.
Yes?
No.
No.
That's all, this is all DLS stuff.
Yeah.
DLS.
There it's just.
Bear with me.
Yeah.
Full-time employees. Budget detail, now we're in general government.
Somebody emailed us.
Are there details for the reports?
Revenue
Oh, yeah, there it is. It's in balanced budget, it's right there. Okay, yeah.
Mm.
And somebody. Okay, cool. So. Let's, This is page, yes, 14. Please come up and join us. All right, do you want to walk us through what we're looking at here?
Yeah. What you're looking at is a little bit different what I handed to you, but I can navigate and get the one which is says local aid, for example, $14.1 million budgeted for 2026. The details are, which I just handed, it's on page 2. I always say this as it's a 5-section for the revenues. One is the taxation calculation. Another one is state cherry sheet revenues. The third section is local receipts. Fourth is enterprise receipts, and fifth is the other sources. So if we follow what's on the screen, local aid is the local aid is the second section, which is the state revenue. The state revenue has revenues and assessments. For the revenues, if I show you here on the first one, it's 14.1 million right here, which includes Chapter 70, charter reimbursement, school choice tuition, unrestricted local aid, veterans benefit, state-owned lands, elderly blind exemptions, and public libraries. So when we net to that, that is the revenue we receive from state, which is $14.154 million.
Okay.
And those are the numbers which we receive through the governor's office. It's proposed
Right.
their budget. I
Yeah.
just take straight numbers from governor's budget or wherever it stands. And this time we used the Senate numbers.
Yeah, we did use the Senate numbers.
Yeah.
They came out early.
Yes, they did. So,
So we don't know that for sure, but it's what we currently, that's our best guess right now.
Yeah, so we look at the governors, we look at the House and the Senate, which is unusual. I don't know if I've ever had the Senate, like, it's been this far down. So kind of following trends, the Senate budget, there wasn't a lot of difference total, and it made more sense to what we were expecting for, like, by the time the Senate budget came out, Chapter 70 money, fair share really started to become a part of the proposed budget. So we felt comfortable using those numbers. But yeah, reconciliation and you know what the final budget numbers are, we never know.
Okay. So that's the table that you just handed us, the second block that says Cherry Street at the top.
Yes.
Cherry Sheet at the
Yes.
top.
That's the estimated receipts, which is from the governor's budget.
Okay, so far so good.
The offsets are the opposite of that. It's in the same section at the bottom, which is estimated assessments and charges, which gets deducted directly off of our local aid revenue. And that's also part of the governor's budget. And those are the same numbers. I normally try to take the higher numbers for the estimated assessments and charges, just in case they turn around and change their mind. Revenues, I just go with the columns, because there are columns for the House budget, governor's budget, House budget, then Senate budget is out, so we're using Senate, and then it will be conference committee is going to finalize the state revenue and assessment budget. So when that comes in, that would happen sometime in September, and that gets reflected onto her tax rate recap.
Okay. Questions so far?
So 14 million.
Yeah.
In receipts, and then all the rest of that, air pollution, yada, yada, school choice sending, blah, blah, blah. And the offset receipts is its own number?
It nets, I have to go back and check the formula, but it nets to, which excludes school choice and charter school.
Where am I looking?
So at the bottom right here, so the assessments. So what happens is, like, I have to take the calculator. It's on my Excel sheet formula, sorry. But offset receipts are air pollution too. It should be net. Can I get back to you on this one?
Yeah.
What it nets down to, because it's all in formula. I can email you guys.
Sure.
So it's not offset receipts plus all those things below it. Those things below it somehow roll into the total offset receipts, but it's not the total.
It's a subtotal. Okay.
Okay, got it.
Oh, you know, I got it.
I mean,
The offset receipt is school choice tuition and public libraries, because that gets credited to their own accounts,
okay.
part of the general fund.
They're the ones, so they're the ones in blue.
Yes.
Yeah.
Yes.
I see.
So all of
That's
these
why it's color coded blue.
Huh.
It doesn't take me long.
I was thinking.
So all of these other revenues get deposited into the general fund, but these two categories get deposited into their respective revolving accounts.
Okay.
Accounting wise, there's a difference.
Okay. Makes enough sense.
That leads to the net cherry sheet total, which is 10.04 million, which is total of local aid, offset, and assessments.
Okay.
The local receipt, 6.48, is the third section on the page 2, which is the top section. This is the one which I sent you guys the report, which for 2024, it's an audited one, but not yet closed with the DOR. 2025, whatever is posted, it's a draft report because those reports are not trued up yet. The local receipts are estimated. So when I prepared this budget, I had numbers till mid-April. So what I did is I calculated on the basis of like in this fiscal year up till April of the mid-April, we
Roll it out.
yes. And what are we going to expect in next 2.5 months for the rest of the fiscal year? Technically, revenue budget gets finalized when I will be doing my tax rate recap, and that's when everything is in actual. So then I have to look into, it's like, I cannot put more money in this account, this line, if it's not actually collected. But I'm submitting my tax rate recap. So expense budget gets finalized before June 30th. Revenue budget gets finalized when we're doing our tax rate recap, and everything has to balance, and books and numbers needs to be closed before I can enter it into the system. So otherwise it gives me the kickback. The other thing, what happens with these kind of thing is if we are expecting some kind of increase, like it happens all the time with the water rates, I have to provide additional documentation to DLS to show why I am putting more revenue than what was collected as of June 30th of the prior fiscal year. They need, but they won't even let me add additional penny onto that line, any of the lines.
Okay. So in short, local receipts are going up though 10.46%.
Yes.
Or estimated to go
They're
up. We don't
estimated,
know.
yes, we do not know yet. Yep.
All right.
This next section is the tax levy. So that's the first section of the revenue calculation on my sheet. It is standard state formula. We take a state levy limit from the prior fiscal year. So after I do my tax rate recap and it's all approved, I have this particular sheet which I go on to DLS, and it gives us the levy limit. Take that levy limit 2.5%. It's all state formula. Add new growth. I got the growth information from assessor's office. If there is an override, we don't have override. So then our true levy limit is 29.8 million change. Then I'm adding debt exclusion to it, which has to do with both schools. And that's what we have to pay in debt. On the excluded debt, that gets raised and appropriate above and beyond the true levy limit. So that number is added into that column. Overlay is allowance for abatements. Allowance for abatement. It's a fancy long name, it's assessor's word, but I call it overlay. Bottom line, real estate or personal property, there are some exemptions given to the residents, so we have to refund. So if we bill as is and collect all the revenue for the taxation, we'll be collecting everything but $400,000. And with the HEROES Act, that's the new this year, I can't speak to that.
Tax breaks for military.
Yes.
blind, and disabled, I believe.
Is that
Yes.
another line item that you'll?
No,
would
so the
fall
reason,
into
no,
overlay?
so if you see, I did $330,000 last year and this year
That's
400,000.
the-
So that's what, it's like, we'll see how it falls out because every community is different. Little I understood from my conferences that if you have A exemption, then you can't get the B exemption, but you have the C exemption, so you're not qualified for this one. So and I don't know if it's 100% or not yet.
Yeah, so the $400,000 is based on a projection the assessor puts together because of the HEROES Act and extending those benefits, the tax abatement benefits to widows. The assessor has some kind of an idea of what's coming at us, so she wanted to increase it. We went back and forth on this number and to 400 because it's such a new set of exemptions. So we went a little higher and gave ourselves a buffer.
She'll have a better sense of this next year after this first
Yeah.
round of new.
Senior tax work off is
tax
senior
reform.
tax work is bad.
Yeah.
So just veterans, so yeah, I mean, and then it figures into, we kind of went around and asked. And also the Board of Assessors and working with them as far as what they thought and what we could use of overlay for the budget. So next year's going to be, the next 2 years are really going to be interesting with these, like for us to get a good idea of what how much abatement will be.
And it was CPA, seniors can get CPA abatement as well, if I understand that correctly.
Yeah, so with CPA, what happens is it's totally separate from the taxation. So it has its, like, I always talk about general fund, so that's 001. Enterprise, it's a separate entity, which is also so. CPA, it's separate entity also, so it doesn't come out of this calculation.
here,
It
okay.
is separate 024 fund, which it gets
Yeah.
paid out of.
So CPA is a fee that comes out, the separate funds that Hadel is mentioning have their own stream of revenue, like CPA, water and sewer rates go into enterprise. So they have their own revenue sources, but they also have very specific uses, like we saw with CPA and
So does that
wastewater.
money just go there
It goes
automatically?
there and it never goes through the general fund. It has its own revenue source, like sewer and water and CPA and whatnot, and goes right into those accounts for the specified uses.
I don't mean to be a stickler here. I think there is an Excel error on this sheet that I'm looking at. If you're looking at this percent change and this percent change down here, 46.41%. The change from 27 million to 28 million isn't 46%.
I would
From
agree.
32 to 34 isn't 55%.
Only 4.6.
So, I mean, I can look at I think the actuals are good, and so I'm not overly worried about it, but when you're, doing those things, you might just want to check that formula.
Yes.
But
Fair point.
I really do my best to not.
It's a fair point.
Yeah, it's a big one.
Look, I've made plenty of Excel errors in my day. try not to be a stickler about that
Every
stuff.
year,
but-
we think we have our Excel sheets correct for this budget book, and it's like one, yeah. No receipts, so, okay.
Okay.
So the, after that is amortization amount. That is 300. So basically, when we have our debt, we get premium. That premium, we use it to reduce the taxes because it's on excluded debt. $3,310 is from the high school debt. And if you remember from yesterday, we were talking about this debt schedule. If we can share that, and when we share it, you'll see that all the debt schedules are lined up with the principals and interest separately, but then there is a premium, and that's one of the numbers, that $3,310 last year, and it is included in that 21,567.81. This year we received additional premium for $18,000 and change for the additional borrowing related to close out the Mountain View debt or the project. That amount is included to reduce the taxation. So that's why it's the minus number there. And that's our tax levy, which is the property tax, which we can bill between real estate and personal properties, 34.48 million. As I said, this gets finalized when tax rate recap gets finalized. And the number which would change is the new growth number and the overlay, because sometime, I think in August, assessor does their evaluation, as Martha had mentioned, about the professional services section. That gets uploaded on their side of DLS Gateway, that populates onto the tax rate recap, updates the new growth number, and then when I go in and put all my numbers in the gateway, I can play around with the overlay amount to adjust as needed.
Okay.
After that, it's
Sorry, just any questions, councilors, before?
Yeah.
Okay.
Enterprise revenue. So this is okay, so that one is the chargeback to the enterprise fund, because enterprise is like a mini self-funded business under the umbrella of City of Easthampton. So when enterprise uses the services, if they would have been their own entity, they would have need to hire a treasurer, auditor, collector, procurement officer, mayoral services, space to run the office, pay the payroll and benefits, all of those like HR services. So what they're doing is they're sharing the general fund services in their enterprise entity. So we are charging, as a general fund, we are charging them back for the services we are providing. So that is the revenue coming from enterprise. It is not that $5.5 million full. They support their own budget. So their budget for water, sewer, and wastewater, along with the reserve, is 3.38 million and change. The indirect cost is $2.1 million and change, which adds up to 5.5 and change. So that whole 5.5. So if we look at the bottom line of the budget, if you scroll a little bit down, please, for me. Okay, so 61.98 million is the total budget, but out of that, enterprise 3.387 million is raised by the user fees for water, sewer, and storm water, which goes into its own fund. However, if you go up a little bit, the enterprise revenue is 5.5 million. So if I take that 5.5 and minus 3.387, which is the expenditure, 2.1 million and change is the indirect cost for enterprise to use general fund services. Does that make sense? There's an agreement, which mayor's office, has an agreement with Board of Public Works.
It's like an indirect cost rate, isn't it?
It is.
Similar.
Yeah, it's similar to with the school where there's a chargeback agreement of costs that get passed back to the school, like health insurance. And in this coming fiscal year, actually at the advice of the auditor, we're going to renegotiate that chargeback for enterprise. It's been at 10% for a very long time, and that's abnormally low. So there will, again, this will be something in 27 that we'll see some change and of just what the city can charge back, because right now it's not a parity. It's not equitable. And enterprise is in a stronger position with the increase of rates. We're finally getting those up to where they need to be to support the operations we have.
Use more water. Don't
Turn on
conserve
your
it.
faucet.
Don't worry
Use
about
more
it.
water.
Go crazy.
You'll keep the rates down and fund the enterprise fund.
Don't break the drought restrictions.
Yeah, don't break the rates. Yeah, that's right. But use more water.
It's not in your
I have
law.
a hole in my roof and the water coming through. Does that count?
I'm sorry.
Replenishing the
Groundwater.
supply.
That's excluded, yeah.
Seems like that.
Excluded water.
Doesn't seem
Like
fair.
excluded debt. Yeah, excluded water.
Well, I just want to correct myself. There is an Excel error. This column is percent of total, not percent change.
Okay.
So,
Definitions are
Sorry.
important.
Not us all.
An error of an error. That's good. Because I've got a note like, how did we do? Okay.
Cross it out.
Yeah. All right.
yeah, I just looked at the
One thing
total
that
at
was
the
taken
bottom
care of
said
today.
99.95, and I was like, what? Oh, wait, hold on.
Oh,
I think I just,
percentage of the whole.
Reading the column headings is really important.
yeah, it's
It's a
it is.
thing.
It's true.
So
Okay.
that's enterprise revenue. Mayor just mentioned about the chargeback for the school. The difference between those two numbers, school is more of like to show it on the books that this is what we are doing, but there is no monetary transaction takes place from the school budget to our side. No, it's just to show that city is supporting the school with additional services on top of whatever their expense budget is. That's called net school spending calculation. Enterprise revenue, I do go in, we
Knock
don't
on
raise it,
doors,
yes,
like,
not, yeah,
hand it
I,
over.
no, I don't. I just take it off from their books. All that
Take that in
count.
cash, please.
Yes, no,
Mostly
I
charged
do.
back to the school's utility costs.
Yes, and what I do is, when I post the budget, I upfront on July 1st take this from enterprise fund. So enterprise fund in my world is 060 fund and general fund is 001 fund. So what I do on July 1st, when I post, I just move. They have it. I move it. Yes. Cover the revenue on day one. Yeah. So CPA revenue, as I mentioned before, general fund, it's its own animal. CPA, it's its own fund. It goes, manages on its own. So their expense budget is 811,300, and that's what their revenue they're gonna bring in. If they don't bring in either one, if enterprise says that we're gonna bring in this much revenue, it's and there is a deficit, it gets charged to the taxation when I do my taxation. So that's why on June 30th, I'm after every single department stating you have to make sure that all the budgets are in positive line. Otherwise, it needs to be raised on the taxes. So if there is a deficit shortfall, anything happening in any of those categories, it gets raised on the taxes.
Okay.
Other financing sources is combination of series of things, which is the last section. On page 2 of which I provided. So we just discussed CPA, amortization, sale of lot and parking receipts. So sale of lot has to do with the Parks and Recs department with the cemeteries. So whoever provides the services to keep up with the bookwork, we just charge to this account because it needs to be put into a separate revolving account. So I just take $7,500 from that account to support the time worked by the general funded positions. So it's like some Sam's time.
Sam Pliska, Park and Rec takes
Park
care of the
and- yes,
cemeteries.
And Treasury Office, where they do the collection of the receipts. I do the posting on the journal ledger. So those are the little bit of our work which gets funded through this 7,500. Parking receipts, police department issues the parking citations. There is a whole processing which they take on. There is a whole processing which takes place in the collection office. Then there is a turnover to the treasury office. I ultimately post onto the journal ledger so that whole time gets charged back to general fund from the revolving account, because as per statute, Mass General Law, we have to maintain these accounts separately in their own separate revolving accounts. So that
Is there a
comes-
reason they're identical? Sale of lots and parking receipts? Are they just numbers that are in that?
It's a different account numbers in my world.
I mean, they're just so disparate. Parking
But the
and a cemetery
numbers,
plot.
the estimated account numbers.
They
are the same.
estimated.
7,500 and
Yeah, we
7,500.
always, yeah, we always
Okay,
have
it's
to-
just,
yeah, we
and those two
hit
just hit the same
yeah,
number.
They're
for-
not actual.
No
Yeah,
way.
they're not
That's
actual.
right. I was just curious if
It
there was
yeah,
rationale behind it.
no,
It's just a number.
just a
Yes.
number.
They happen to be the same.
Yes,
Okay.
I can guarantee you.
It's
if
funny.
we-
Parking, sale of a cemetery
Yes.
plot, same. Okay,
I had 7,500 as just.
Yeah, we,
just a number.
we expect more money in parking tickets and parking related. But we haven't seen it yet. So it's just such a weird thing to project and.
It's not much of the revolving area because it's just the fixed cost goes to the trust. And whatever we collect as a revenue, just do a guesstimate at the end of the fiscal year for the next year. But as I said, I can guarantee you the amount of time our staff puts towards getting all of these things done.
Yeah.
More than
Yeah.
this. But, yeah. Overlay, $400,000 has been supported towards the budget. Mayor has asked Board of Assessor to release access overlay and they approved it. And we can make
What is access over?
access overlays, so whatever is the balance after we paid all the reimbursements to the real estate and personal property, including senior tax work off and
Abatements.
abatements and exemptions.
Okay.
Yes. And there is general stabilization for $4 million.
Yeah, this is the one I think people are gonna be asking about. This is
Yeah,
gonna be the
absolutely.
controversial one.
Yeah, so it's the right setting of our financial policies. And as far as what we've been saving in our stabilization accounts.
When you say right setting,
So we had a percent that our goal, and the DLS spreadsheets actually show it earlier in the budget book, show just how much cash we had set aside for general stabilization, but also capital. And it was much higher than what the state would recommend. And there were some questions with the state, but mostly our bond council of what are you saving all that money for? And why isn't it in your budget? And between ARPA and one-time stuff, cannabis and whatnot, it was when we looked at our financial policies, we flipped it, we set it down to between 2% and 4%. So we're going back to saving what we used to, like before 2017, and keeping that aside and using free cash for capital with grants. So those financial accounts those two accounts won't be as hefty by design, and putting more cash into the budget and using it to spend for a lot of labor costs as well as DPW costs for raw materials, cars, and paying as you go rather than saving and using it stopgap or
or departments coming back a lot for appropriations, which has been a strategy of mine for the last 6 years. Tom and I have had some conversations about that
We
strategy.
sure have.
So, a little tip of the hat for Councilor Beek pushing me to go this way. And BLS, the Department of Local Services, and the Department of DOR came in over a year ago and looked at our policies and gave us some good, language around it, and then percents, kind of playing around with percents of what we should be putting aside. This really changes. This is a reset of the budget. So we go from growth budget to flat budget going forward. And I would expect to see, if we don't hit the revenue projections, it does put Easthampton in a place where we'll look at layoffs. I mean, it was growth, expend the ARPA, make up as much as we could in capitalization and wages through CBAs, and hang on through 26 and 27.
Okay. I have a series of questions. And some of them are even arguing against my own instincts here, but just because I know that there's going to be some of these things. And then I'm sure my colleagues have plenty of questions as well. So last year we spent 1.8 million out of general stabilization to make that budget happen. Yep. And I think the thought was that free cash comes in, we'll bring that back in.
We did. Yep.
Yeah. So
why does this look the same way, and why am I calling it something else?
No, I guess my big question would be like, okay, so after this, where will our general stabilization balance be?
Our goal is between 1.5 and $2 million.
1.5 and $2 million. Okay. So say that we hit a recession.
Yeah.
And we won't be in a position. I mean, we'll have spent that money up front, but we won't be in a position to absorb that hit.
So we won't create the problem of the 1.8 and guarantee ourselves using that money for gaps, and we'll spend the money that's in front of us in the general fund budget and kind of stay within guidelines. I mean, we expect recessionary behavior, and we won't have ARPA to buffer that. So this is a tightening of our spending and putting us almost right back to it. Not just the amounts in the general stabilization of what they were in 2017. The goal was between 1.5 to $2 million. The amount of free cash was much lower. We know free cash, for a whole bunch of different reasons, is going to go down the amount we get back every year with ARPA not being available.
Right. I guess my thought is, I just looked at a budget where every single line in the budget, there was almost nothing in there that felt discretionary or fun. It was all, well, this went up because it's a step increase, because we have a contractual obligation to provide this, because the price of this material went up. And so those things went up pretty much. I mean, maybe there was someone who was underplaying that to us, and in fact, there's some more fun tucked away in there. But the sense is that that was kind of where it was.
Yeah.
So I think we can expect that those costs will increase in a comparable way next year. But the only way we're making this work is by moving 4 million out of general stabilization, and unless our revenues exceed expectations by enough, we're going to be in a situation next year where those costs are going to increase again, and we're not going to have the money to do this a second time.
Yeah, there will be cuts. If these revenue projections are off, and I own them, I'm not saying it to say fatal, but yeah,
Like, I don't see how the city in the next 2 years, I mean, this budget is a growth budget to make sure, quite honestly, if folks are laid off, that when they come back, they have a pay scale and a CBA that treats them appropriately and they're not fighting further deficit, personal deficit. Absolutely. I mean, 3 growth budgets and then lock it down for another 2 fiscal years. And the strategy that I'm approaching is $4 million or more than $4 million in general stabilization is one-time money. And this budget going forward in the following years, if we stay at inflation, will sustain people's salaries and where we are with general services to the public.
Counselors, questions?
I don't have a question. I guess I'm I think I'm a little confused. You work with budgets more than I do. But I just feel like through each of these meetings, I've heard we're level funding. I've seen our department heads get between 3% and 4% increases, and we're reducing hours of other individuals that I've already articulated I don't think is particularly fair. And so I don't know why I don't understand why we aren't trying to make cuts in other ways, to protect people's income if there's a potential for people to be laid off, but also, everybody came in with, these increases that just don't, I think I'm worried we're setting ourselves up for real hardship for people. And I'm trying to figure out how to protect our employees while also trying to have them provide services. So I guess I'm concerned why we increased things when we, in my mind, should have been trying to cut back. It's just kind of I grew up in poverty, right? So I'm constantly trying to figure out how do I get to the next thing. So that's not the way I think about my business.
Mr. Connell, do you have any thoughts?
So what you say makes a certain level of sense, but the timing seems really off, given the climate of the world and the country right now. Like, it just feels like status quo would be better than a huge spending of $4 million or, moving it so that it can be spent right now. Like, it just feels like, I don't know.
Did I weigh in on that actually?
It wasn't done.
Okay.
I may say something that should completely
That's true.
is mind blowing.
I'm sorry.
I won't. No, go ahead.
No, you go
Go
ahead.
ahead. No, I was.
Oh, all right.
I'm just teasing.
Jeez. All right.
But it worked.
It did. You got me. So I feel like it's an interesting predicament, and it's one that frankly I don't think we're gonna necessarily solve tonight. But it's like I want to just think about this as we approach the end here, because just to sort of I'm just trying to structure a lot of thoughts. We sort of have the way I see it. We have a situation. We have a budget.
Sorry, that just dinged, and I don't know if that's.
It meant that somebody left a meeting.
Oh, okay. I wanted to make sure it wasn't someone trying to get in.
I appreciate the heads up. I missed that. On one hand, like this budget, the costs increased, and the costs, in my mind, increased not because we were necessarily like fortifying departments, it's because, you know, we gave everyone well-deserved raises.
Not everyone.
No, not everyone. We
everyone.
gave through the union. I mean, you're right, some people received a raise and also had their hours cut, but the most of the salary increases that we saw across departments were primarily a result of contractual bargaining.
Sure.
And so that the only way to bring those costs down is to reduce hours or reduce staff or reduce personnel. The materials that we saw their increases come in, we have very little control over. So there's something we could consider doing is making cuts now to preserve some stabilization so that next year or the year that come recession, right, we have something to pad the blow then so that it's a little bit of pain over a few years instead of potentially a lot of pain in a single year or a couple of years. It's something that we can think, but it's like, but there's no way you can't, nothing, this budget, there's no fat in it. There's not, how do you couldn't reduce it by several $1 million without inflicting some real pain. And so, it's just,
So if I could, so
absolutely.
the idea of cutting hours, and I hear it's a financial, it's hours less work. The standard work week is 34 hours. And there are folks who have worked less hours, and I have worked very hard to get them more hours. And the inconsistency of who has over 34 hours is something that was not tenable. And it was very much connected not to their job flat out by job description, but also extra responsibilities they took out on because of ARPA reporting, because someone being ill. And quite honestly, I didn't take them back, and certainly could have, and maybe even should have last year. And while I believe, I know that there is pain with those hours, I'm not discounting that, but the average work week, our schedule is 34 hours. It used to be 32. And I am not looking for sympathy or excitement, but I am extremely proud of bringing in voluntarily 3 unions. And of those unions, you are talking about double digits for increase. And I bear no ill will against that at all, and fought for, and again, I'm not trying to, but I think that there is a longer perspective here that I just want to get out. And I understand that it is a cut in hours to some employees. I understand that. There are decisions that had to be made, and right-sizing those work weeks was a part of it. So the cut in hours, there are fewer hours some people work. But it wasn't to 32, and it wasn't to 30, and it was, and I think consistency is something that is important. And yes, and there are department heads who were readjusted, and they're also managing more than one department, or took on more responsibility because I asked them to make those, but to, instead of hiring a second person.
Mayor? Do the department heads work 5 days a week?
Yes.
And then the 34-hour people don't work Friday or do?
They do.
They just spread it out.
Yeah, I mean, sometimes people will come in for a couple of hours on Friday to get some paperwork done, and that could be comp time, or they can adjust their hours, so maybe they leave on Monday or come back or come in late on Monday because they're taking a long weekend. Mm-hmm.
But if I work 34 hours, I have to spread them out over 5 days? Like I need to, or I can spread them out over
No,
whatever?
it's usually 4 days.
Okay.
I will sometimes leave early on a Wednesday and a Thursday because I like to do it on Friday when there's no interruptions. I
Yeah.
get a lot more done in an hour and a half than I could regularly because of all the negotiations.
But
And
my
my door
understanding,
always stays open because I'm the procurement officer. I can answer questions throughout the whole day. If someone comes to my office, I sign POs throughout the whole day, get those down to the auditor's office. That flow of purchase orders should not be
Stop.
impeded. Yeah. We can't pay our vendors on time.
Right, exactly.
I think that the challenge that I'm having is like the council on aging, for example. My understanding is they've always been 35 hours and maybe because of this, it's making everybody the same. But, you know, that was something that they provide those services because they are open 5 days a week. You know, I look at what's over at the police station and the fire department, and those individuals do a tremendous amount of work. And my concern is that some of those larger budgets are going to be able to help some employees, but other employees are not going to be helped. And each of them said, you know, we asked the individual today, you know, I think when I asked her, do you have enough work? And she was like, oh yeah, I have enough work, right? Like, I just think that to look at a budget in human resources, and I'm not knocking, right? I'm just saying it just feels like a contradiction where people are losing funds and yet we're going to put $1,000 into being able to do office parties or whatever. That just feels, you know, I could have used that money to like deal with the rising cost of food or, you know, people who have kids in school and college and like, you know, coffee's not going to make me feel better. Or individuals who are, you know, close to retirement and, you know, they lose such a significant amount of money that now they're like, I don't know if I can retire now because now I've gone backwards and I need 3 of my top years are now not what it was that I thought it was going to be in 3 years. And so those things matter. And, you know, I'd be curious to see all of those hours, the people who are losing, like what is the total cost? What is the total cost going to be to the city to be able to do that? So that's something that I would like to see, but I think those things matter. I think they matter. And we're in a really tight spot right now. And the only way we're going to get through this is if we stick together. But right now it just feels like 6 or 8. I don't even know how many people, because today I feel like I heard more people saying that they didn't have hours. I thought it was 6, but it felt like it might be a couple more. But like, if we're going to have a cut, that they should be fair. It should be fair.
Well, okay.
But I hear what you're saying.
I definitely, I don't want to discount at all the hardship that any shift in hours could provide any employee. I guess the thing that I am going to be thinking about over the next sort of week going ahead into this thing, the thing that's really sticking with me is just the fact that, you know,
I mean, I will just put it on the table. This is your job.
It is.
Yeah,
And-
absolutely.
And so I just feel the conversation is, you want me to do something about it. And I feel good about my budget. And if you want to cut it, then that's your prerogative.
Yep.
And
No.
you can cut them out. I mean, that's just what it is. But I absolutely will get that spreadsheet with everyone whose hours were cut.
Oh, and yeah,
And the amount.
and just to clarify, you've made your budget, and there's clearly a lot of work that's gone into it, and I understand the thinking that's gone behind it. And I'm just now I'm in this position of this is my job, and what I'm sort of encouraging my colleagues to think about over the next week as we go into the next round of this is just how we feel about if this was the last budget we ever wrote. I love it, but I'm a little nervous about the reserves. That's my, and I say that as somebody who historically has been in favor of, you know, being a bit less conservative in the way that we budget and still just looking at the reality of the world that we're facing. The idea of going into that without a little bit of padding does make me nervous. At the same time, there's not a lot of fat to trim here, and I'm a little, I don't exactly know what I would do about it, but I do think that is just something that I'm going to be chewing on, and that I would encourage everybody else to chew on. But you're absolutely, just to be 100% clear, like, I'm having this conversation with you to get your feedback on this, but I'm not asking you to do anything. You submitted your budget. It's our job to react to it. So, and that's what we'll do. I don't have any, I'm going to need some time to process, just now that I've gotten everything. And that's why we have these hearings, and then we set, you know, a time to discuss the overall budget. And we'll be doing that in a little over a week, I believe. And so, I think that's, we can, so we can do that then.
I want it to be a collaborative process. I don't not want it to be. I mean,
It's not though. It's not built to be collaborative.
it's not like
I mean, that's.
I mean,
just a
maybe it's
fact.
I guess it's collaborative in the way, and that I would say, and I think most mayors wouldn't. Give me an amount that you want to be cutting. And I'm not saying that as a challenge, but, and I will go through the budget, and there are some things that have increased, or some things, like, this is not, the departments are never, it doesn't look equitable because of different conditions, but I mean, that's why we have the spreadsheets that we do in, you know, among that. Give me an amount, and clearly labor is a priority for folks, and I'll come back with something. And just to be clarified, by collaborative, I know that a lot of work has gone into this by everybody, and I know that you have said that you're very proud of this, and you should be, right? You should be. And so when I, and I'm not speaking for all of us, but when I look at this and I think, oh, this might be, like, I just don't want, there's nothing personal in this, right? Like, you know, that's what I mean by that, because I think you should be proud, right? Like, and this is one of 8, right? And so I also want to acknowledge that, right? Like, this is one of 8, and I think all of us have been, at least the I guess this is the 4th time I've done this now, time flies. But I think it's always been a very respectful and process, and I think that we've tried to be very collegial, and I think we've tried to be really responsive to the needs of the various departments. And so that's the spirit that I think I'm trying to come to this as well. No, I appreciate that, and I don't. It's because of the work that's gone into it and how the backup documents are on the expense side. It's not difficult to change it. Like, we know what the money is. It's all, you know, we've got this master spreadsheet, and a part of being proud of it, and the way that we build it out now with the spreadsheets, part of it is the actual structure of it behind the pretty book that everybody looks at. So to change that, especially with the timing of the votes, it's like, we're ready to go on this side of the table. Like, I guess, and I hear the grave concerns about what's coming at us, and you know, the cut of hours, and that's disturbing and whatnot. I absolutely do. And yeah, you know, I think that we leave too much money on the table into free cash and stabilization, and we don't have, I mean,
we have capital projects, there's always money to spend. And that's, I think we're good where we are. In general stabilization, I mean, my strategy over 7 years is to use that to fill budget gaps. And I just like tamp down expenses, like police, fire, they've never come in at my targeted budget. HR has never not come back for an appropriation. And so I guess you guys, the city council can say no to any given appropriation that I put forward. Just like with the budget, you can cut. I think it happens on either end, and I respect that, and I'm ready to, to respond to, cuts you might make, and prepare for that.
Okay.
I could just say one more thing. Sure. I think the last year has been really kind of challenging with just different folks leaving and things like that. But, I can't stress enough. I appreciate the three of you, right? Like, I think that there's been a learning curve. I think that there's been just a lot of various things, right? And I think that, the three of you have always been here to for the dialogues that we have and the explanations for the things that we do. So, I just want to acknowledge all of that, right? And I know that all of this is reflected in the work and what happened. So I want you to know that I appreciate the three of you very much.
And your questions in particular, Councilor Denham, I can't tell you how many times the department head's like, so when she asked me if I have enough money in my budget, you're sitting right there. I was like, look, that's the job. You can say, you tell me all the time when in my office you don't get enough money. I said, so, say it here. But I really appreciate that, because that's a challenge. I think that that's good for public dialogue, and I think that's good for my office, for me, and everyone to think about the money spent, but also the money people might want and the difference between. So, likewise, and to Tom and Councilor Peak and Councilor Coniff, I feel the same way. It's not always an easy conversation. And we're walking into different times, and I just feel that we were able to save a lot of money into accounts, and you need to put the cash in to the budget forwardly and hold people to the department budgets. It's just a change in philosophy, but I also think it's the right time to do it. On the other hand, cutting the budget and seeing how we do, and then having the appropriations come that way is another, it's an approach that I've used for almost 7 years, maybe 6. So again, it's easy enough to pivot to what, and you all you represent more closely our shared constituents. So you're hearing probably much more of it than I am.
Well, I certainly have a lot to think about.
Absolutely.
I suppose I would entertain a motion.
Sorry. But in order for the president to balance budget, we did not discuss $222,000 on the last 2 items. It's a quick item. Capital stabilization is funding 123,912 on the page 2nd.
This is all.
That has to do with the EV charger.
Yeah.
Vehicles. It needs to, as Mayor mentioned during the DPW admin budget, that it needs to come out of the capital stabilization so we get the credit from the state and federal, I think.
Yeah, the federal, the state will do it regardless, but the IRS put out a new treatment of leased vehicles, and to get the direct pay incentive, which we are told will stay in place until 2032. It needs to come off of, it can't be in a general fund budget. It needs to come out of capital stabilization. So that will be a consistent cost.
And that's the leasing cost.
It's the leasing of the EV vehicles.
Yeah.
EVs and hybrids.
And the tax rates?
Tax rate stabilization is the account which we are using $100,000 to support reduction of the taxes due to the increase in the excluded debt for the school, which we've been doing consistently. This year we are doing $100,000. That's all. That is the balanced budget.
Thank you, Gail. I appreciate your diligence.
Yes. And to think we almost left.
To conclude,
All right. At this point, I would entertain a motion to adjourn.
So moved.
I will second.
Motion second. All in favor?
Aye.
This government meeting is brought to you by Eastworks and our local cable subscribers.